So I want to start off by clarifying some comments I made in the last video that talked a lot about inflation. Inflation is going to be a long-term macro business cycle event that's going to occur and affect the market at a macro level. That's going to be a 1 to 3 year kind of timeline way of looking at things. But today I want to talk about the more short to medium term. What are we going to deal with now? How's the market looking like right now? We're kind of hitting this back to the all-time highs, but the economy is not returning back to these levels. Well, today gave us some insights into what the overall sentiment is. It seems like as we get to these all-time highs, there's a little shakiness in some areas of the market. So yes, the NASDAQ was up today, and yes, the S&P and the Dow weren't up that much, or weren't down that much today. But the important thing is how that completely flipped. The past several days, maybe more than a week now, the Dow has been the leader of the three indexes, then the S&P in the middle, and then the NASDAQ with the least amount of gains. Today was the NASDAQ leading, and it was really megacap tech, Facebook, Amazon, Apple, those companies that were leading the entire market, of which many of them weight the NASDAQ very heavily. The NASDAQ is very focused on software. So the NASDAQ was up, and the rest of the market wasn't. These are more defensive stocks, and the Dow are more they're industrials, more cyclical stocks that need the economy to be reopened in order to do well. The software companies are doing well regardless of the economy because they don't need people to be traveling around to buy their products. They actually benefited a lot from COVID, specifically Facebook and Microsoft, because more people are working from home and spending time at home and on social media. So there was an interesting rotation occurring today back into those stocks. So I wouldn't be surprised to see a little bit of a pullback from these levels as there's not really a lot of good news coming out in the next couple of days. We've hit a lot of the good news, and this was the same logic that I applied. If you go back to my first ever daily market analysis video, the same logic I applied. We've hit all the good news, and we've got some, catalysts that's coming in that could give us the downturn, that being the coronavirus. Same logic. I don't see a catalyst for a downturn, but I see the lack of good news and a slowing down of the momentum as we wait for the economy to catch up to the stock market. I'm not saying this is going to be a pullback, a hardcore pullback that we need to sell. It's a freak out situation. I think if you've seen gains in some stocks that you're not bullish long-term on, that you're not super excited about, just take some off the table. That's what I've been doing. Your long-term positions, you should just ride a little bit of the wave, not get too flustered if you are down a couple percent, whatever it is. But really, I think that valuations are at a good level, very fair right now. But there has been a lot of positive sentiment, and that positive sentiment hasn't really gone away. And I think it's now time for a little bit of negative sentiment, a little bit of overbought, overvaluation narrative to kind of take center stage for a little bit as we wait for the economy to get back to, a more connected level with the stock market, which was the case before COVID. The economy was doing well, and the stock market was doing well. Now the stock market is doing very well, and the economy is not doing as well. So let's give us some time for that connection to be reestablished. And then once that connection is reestablished, we should go back on the long-term bull run. And that bull run, without a catalyst for a downturn, should just continue and be accelerated by inflation, at least for the stock market, which is a little bit like a turbocharge, a nitrous oxide for the stock market. So you just need to acknowledge that. So I would be optimistic about investing. If you have long positions, I would not look to sell those. I would look to just hold them, ride whatever's going to come. I don't see, let me clarify, I'm not being a pessimist here. I'm being a realist. I don't see a catalyst for a serious downturn. I see, except for a little bit of a cool off pullback from this incredible hot streak. Nothing crazy, nothing to sell your longs about. Just if you're buying, if you want to buy, if you're a buyer right now, which I am, I sold, as you guys know on my story, sold my airlines, sold most of my cruise lines, sold some of my casinos yesterday. I'm planning on deploying some of that cash back into the market, and I am nibbling here and there on some things that are down today. And I'm going to kind of nibble on the way down if this pullback comes to fruition. But I'm being very patient about it, not, taking a big chunk out of anything all at once. So, yeah, that's kind of how I feel about the market right now in the short term. In the long term, you can go to yesterday's video to look at the inflation. As long as the economic recovery comes, the long-term bull run should come. But in the short and medium term, we might possibly see a pullback just because we've been so hot. So, until tomorrow, peace.